Profits are climbing, margins look pretty good, revenue rising 20% year on year. John Blackledge of Cowen and Suntrust, Yusuf Scully joining us this morning, talk about the quarter, guys. Happy Friday, good to see you.
Hey, Carl.
John, I mean, what is there to nitpick about when you're looking at the level of deceleration on AWS and then the margin story as well?
Yeah, I mean, AWS really came through, right? I mean, investors we were talking to leading into the earnings were concerned about top-line growth amidst rising competition, mainly from, kind of Microsoft's Azure and also to a lesser degree Google Cloud. But AWS beats on revenue, they beat on margins, eases investor concerns, and sets it up for, up 9.5%. On the margin beat, it was a huge margin beat, and they just called out Prime one-day costs were a little bit lower. Also, the 1Q guide was great, better than expectations. So Amazon, for us, really firing off on all cylinders right now, remains our top pick for 2020. We boosted our estimates. Our price target's now $26.50 a share from $2,400.
Interesting. Yusuf, how about your targets? And I wonder how you think of Amazon guidance now, given that some believe that, any guidance they're just bound to blow past in the coming quarters.
Well, so I'll echo what John said. We've also taken our price target up. We've raised our estimates. We think 2020 is going to be a very, very impressive year for them, particularly because of the move to one-day shipping, which in fact caused an acceleration in unit sold growth last quarter to about 22% from 14% last year. So that's really one key metric you need to focus on. In terms of other things that a lot of investors keep worrying about to a certain degree with Amazon. So AWS did really well this quarter, didn't do as well the prior quarter, and that's why the stock saw a lot of, variability. And I think going forward, it's still going to be an area that people are going to pay a lot of attention to just because it's so profitable. Outside of that, I think margins overall, I think the street margins may be a little too high for 2020, at least relative to where we are. We still think they're going to spend somewhere between $4 and $6 billion on this one-day shipping. That's an additional $2 billion on top of what they've already spent this year. So, I think there are some issues potentially on the margin, but overall, Amazon is firing in all cylinders. It is our top large cap pick, and it's hard to argue with the numbers last night.
Both in agreement there. John, do you guys feel like it's tough as analysts to forecast this company? It feels like when everyone's down and everyone's thinking, oh, this is an investment year, Amazon just comes out and almost proves that it has this kind of earnings leverage and takes everyone by surprise.
Yeah.
Well,
no, it's
yeah, go ahead, John.
Oh, sorry. No, it's a great question. One thing I would point out on AWS, with AWS and their advertising business, they account for about 20% of revenue in 2020. But on our math, they account for about 95% of Amazon's operating income. So these two really high margin businesses afford the company great optionality, meaning they can invest and do Prime one day, which improves the Prime value prop. Consumers love it, but it also extends Amazon's moat in e-commerce without really disrupting margins. We really had 2 quarters where margins were light, and then, but with these scaling high margin businesses, they crush margin this quarter. So they just have a lot of optionality, and again, that's why it's our top pick.